Multifamily vacancies remained unchanged, still tight at 4.2% in the second quarter of 2015. We expected about 90 to 100,000 units to come online in the second quarter when it's typically prime season for developers to open their doors, but it looks like that debacle for the apartment sector in terms of large supply growth has been postponed at least to the third quarter, as only about 44 to 45,000 units came online. With this came a very healthy absorption rate, almost the same, around 46,000 units absorbed during the second quarter. That meant that vacancy rates stayed flat, but at the same time, it still reflected fairly strong and healthy demand for apartments across the country. Asking and effective rents grew by 1.1% across the nation. That's the strongest showing for rent growth since the second quarter of 2012. So it's really evidence that at least given today's conditions, demand and supply are in pretty tight balance. Now, whether or not that balance is upset by a lot more units coming online over the next 6 to 12 months is really a story that's going to unfold fairly soon. In fact, based on our most recent interviews with developers, it still looks like over 200,000 units are going to come online this year. So that's over the next 6 months or so. That basically means that there's going to be a large number of apartment properties opening their doors at least in the third quarter, maybe a lot in the fourth quarter as well. And if this happens, we're expecting vacancy rates to rise slightly, and then taper off. We still expect the conditions to be relatively tight overall for multifamily for the next few years, given the fairly strong preference from the younger generations for living in urban centers where these typical large apartment properties congregate. Now, not everyone was spared from this general health of the market. Washington, D.C.'s vacancies actually bottomed out in below 5% in mid-2012. It's been rising since then because it's had to endure 2 straight years of record completions figures. In fact, as of the second quarter of 2015, Washington, D.C. is now at 6.9%, and we may well be in the mid-sevens by the end of this year because guess what? 2015 is going to be another record year for Washington, D.C. completion. So overall, things are tight in the multifamily market. They will probably remain within the 95% occupancy range over the next 3 to 5 years. But watch out for those specific neighborhoods and markets where supply growth is really outstripping demand, like in places like Washington, D.C.